Hello, folks. Um, Welcome to this week's Forex commentary, and it's been a while, long time no see. The past couple of weeks, I've been with my mom and my siblings, and so that's the reason why I've not been active, on YouTube or even updating anything on my Twitter account because aside from the fact that really the network, um, because I went to Benin, wasn't stable enough. I just decided to just use that, as an opportunity to just stay off, uploading and doing work related stuff. So so this month, that's August. I don't think we've had any commentary for August, except the last one I did in July, which I think I said it was gonna rip into the month of August. So looking back at the charts, because I kind of like spent a number of a couple hours on charts, not um not as a stretch, obviously. Like I've spent, you know, yesterday, today, and I intended to make this commentary on Monday. That would be this midnight. But for some reasons, I'm thinking something might happen and I might not be able to do it. So I decided to do it now. And it's not even the first time I'm doing it. So now I want to have to do it because I already made claim online that I was going to talk to everyone in commentary. So this is the dollar index, and I wish I could ask every single person listening to me how their trading in August has been. And aside from the fact of this commentary, I mean, I think traveling to see my mom, coming back, I feel very refreshed because everyone noticed that I actually reduced my online presence because I've been feeling very, very exhausted. Yeah, online isn't really the thing I want to be doing, really, but I enjoy teaching, talking about this market especially because I spend most of my time just thinking forex. You get so I find it very interesting, and I find it it's something I enjoy doing when I'm helping people, right? And but when it's too much of it, because apart from the fact that I'm trying to teach forex, you know I'm building an online presence, and there's all of this pressure that comes with my own style of you know you know of my online social media uploads, because I call out trades, I talk about the markets every single week, and it comes with a lot of pressure. And I'm just doing a lot of things at the same time, and that's one of the reasons why I kind of like dropped my online presence. So I'm not doing too much. I'm just doing enough until I can get back to speed. Okay, now I feel very good, and I took yesterday to write down the talking points for the mentorship, because I think it's about time I did the mentorship for the day trading model system and everything that could you can use to qualify a high probability trading day or high probability trading model, whatever it is, really, because I'm going to be discussing the whole lot from my own experience, obviously. And all of these things is built on ICT, so for the record. So yeah. And yeah, looking at dollar index, okay. First thing I drew my attention, because I think I was speaking to someone sometime in June, and the person told me that he expects DXY to come into this level here, this inversion. Then DXY was just drawing into this monthly range. And towards the end of July's trading, we called out some relatively equal highs on the weekly time frame and the daily time frame as the draw. And we've seen the markets actually reject off of that buy side liquidity pool. But then if you look at the monthly time frame, right, it's much more structured, right? We're seeing a breaker here. We have this low, this high, and lower low. So this is the breaker, and we have this inversion fair value gap here, and market trade into the breaker. And more importantly, you'd want to see that the market traded above previous monthly high. So that's key price action detail you'd want to see. And for the past couple weeks in August, we've been seeing the markets bearish for dollar index. Now, mind you, market structure has been bearish, and I've been saying recently that come on, get out of here. I've been saying recently that we are looking at markets through the lens of qualitative analysis, because currently we are not seeing the market trade in line with, you know, data. Okay, markets aren't doing that, and that's the reason why, you know, on the introductory lessons in the mentorship, we talked about two ways to define the draw on liquidity or the high time from institutional order flow. One was quantitative analysis and the other was qualitative analysis. So if there isn't data, can you use market structure to qualify buys? Yes, and that's what we've been doing. And this is the breaker, and the market straight above previous monthly high and into this inversion fair value gap. So that's all it is in the monthly time frame. And you know, this was a level I talked about, I think, last month, but because last month we're looking for upside draw on liquidity. Okay, the draw on liquidity was on buy side, so I took this one out so that we can focus on buy side and stuff. So now I think that we're back eyeballing this level, but this is not the case because we have to deal with you know, the weekly time frame price action and the daily time frame price action, because particularly this looks like an auto block. Okay, but this does not make any sense if the markets are invalidating, you know, the high time from institutional order flow and etc. Okay, so we'll look at the monthly time, the weekly time frame, and see if there's any propensity for the markets to reach for sell side here, because this is the nearest draw here, sell side. So we have this. Okay, so the weekly chart. So on the weekly time frame, first we're looking at objective. We're talking about in the last commentary, that's buy side liquidity here, and you see how the market has been how the market rejected after, you know, hitting buy side, right? And you know, market structure is bearish, and a run above, you know, an old high, if if the high time frame order flow is bearish, would be a turtle soup. And if in fact the markets wanted to trade higher, then I think we've already had like 2 weeks in August gone already, and we haven't seen anything on the weekly time frame to indicate any upside on the XY. In fact, personally, last week I looked at the chart on Sunday and I was looking for lower prices on DXY, and in fact, it was really beautiful. Okay, the way the markets play, especially on Tuesday and Wednesday last week, you know, very beautiful price action and delivery. So this week is still bearish. Why is it bearish? Okay, first off, we're seeing last week's bearish, and on TVC, okay, it's not the same on capital.com, because capital.com we don't have this long weeks running above this previous weekly high, but on TVC we have a bearish candle on the weekly time frame, and you know, markets is trading off of monthly breaker, and we see a very strong bearish close. Okay, you can see the candle close below this candle's low. Okay, so it's bearish, and we'll be anticipating more downside on dollar index. Now, to note, if we continue to see more downside on DXY, especially if we have a closing basis below this up close candle, so this would be like some sort of breaker, this low, this high, you know, it's going to be some sort of break here that validates more downside on DXY. Just something to note. Okay, so that I don't know, for those that have interest in probably holding you know, some positions for longer term price objective. Okay, because right now price action is bearish, and it's bearish looking for on the XY. Okay, so and then there's this on dollar index. Okay, first we have Tuesday was bearish, Wednesday was bearish, market closed this gap, trade into a discount and returned back inside the range on Thursday, making a continuation Friday. So on the daily time frame, we are below key levels. Okay, and what are those levels? First one, we have this auto block on the daily time frame. So we have this auto block on the daily time frame. That's the change in state in delivery on the daily chart. Okay, we have that. So this uplift candle, markets close below, markets return back. This consecutive uplift candle, that's the auto block. And we have this inversion fair value gap. So this we are at key resistance level, and we want to see how the market's trading around here. So the my rule of thumb really would be to not trade in a London session tomorrow, because I don't have the benefit of the market open, so I can't for sure define how the Monday's range is likely going to unfold. Say we have a gap open. Okay, say we have a gap open. I don't know what's going to happen. So we have a gap open, and possibly you want to note that there's this level here, and you want to see the 4-hour time frame close below the new day opening gap. So if there's like a gap higher, you want to see the markets close below the gap on the 4-hour time frame, and the retest of the gap or wherever at key time of day, you want to be looking for shorts on dollar index. I mean, that's what I'll be thinking if I saw like a gap open tomorrow. So, but if the market gaps lower, then obviously it's good, because we are already bearish and the market gaps lower. That's sponsorship. So you want to see the markets try to trade back into the gap. Now, sometimes it doesn't happen on the same day. It happened on Tuesday. Okay, so it just depends. So you want to see the markets return back to that new week or new day opening gap. And there's about 3 ways the markets can deliver into the new day opening gap. Maybe an institutional high time from institutional order flow entry drill, or markets trade into the 50% of the gap, or markets completely rebalances that inefficiency, then continues downside. However, I do not know. Those are things you simply cannot predict. Okay, so we have bearish price action and we have bearish PD arrays supporting the dollar prices. So that's bias for the week, bearish for DXY. So now that we have that, okay, this was the daily order block here, and also we have this up close candle markets trading into this premium fair value gap. So that's the 4-hour time frame change in the stating delivery. Now this by itself doesn't look at how the markets close. Again, markets could consolidate here, but what I'm trying to say with showing you the change in stating delivery on the 4-hour time frame as well as on the daily time frame is just showing you that price action market structure is validating short bearish for DXY and not bullish. Okay, but we still need data for the new week's candle, because this is last week's price action, and the markets, anything can literally happen in markets. In fact, on the weekly time frame, we could see if markets have intentions to be insane, we could see the markets just go higher and stuff like that. Anything is literally possible, but based off of price action candlesticks, everything that it's on the chart currently, it's bearish for DXY. It's bearish for DXY, and not because of the fact that markets can do whatever markets will do doesn't mean I would not have an opinion based off of what I see. Okay, so, and that's why I still allow for time of day, and that's why I have a trading system, because it protects you for periods when you're likely to be wrong. Okay, so if you make an analysis and you immediately take a loss on that analysis, that really doesn't make sense if you actually have a trading system, because if you have an analysis, you need to have a system that helps you validate if your analysis is likely to pan out before you begin looking for opportunities. Okay, does that make sense? So it doesn't mean you have an analysis and you just take a trade. That's more like a bet. Okay, you are not trying to bet. You're trying to allow the probabilities align first in your favor before you take a trade. Does that make sense? So on daily time frame, we've highlighted levels and everything that looks like we are going to see continuation on dollar index, and we have our objective for sell side here, and we are just waiting for time of day tomorrow and whatever things we are waiting for, because the markets now have traded into a premium, which is this premium fair value gap, and there's a change in stating delivery and auto block. All we need now is just time, and we just go short. Okay, we need to see Sunday's open, and then we're short on dollar index. So on the monthly time frame on EU, currently we're seeing the momentum on the monthly time frame. We're seeing it's bullish, and not just bullish, randomly bullish, is after the market trade below the previous monthly low. Okay, that's something you want to note. Okay, because markets trading to previous monthly low and expanding this much inside the previous monthly candle, that's very huge. That's bullish price action, and it might not be the fanciest type of price action for me. This is not the best price action. Okay, we've seen markets like this severally, and in fact, I don't think this one is more like is worse compared to this kind of price action. Okay, so we've seen markets return inside the range of the previous monthly candle. That's July's candle. So we're seeing August. There's a lot of momentum in August, and mind you, when we looked at the 3 months time frame, at some point, I was talking about how this high here is low resistance liquidity run. Okay, you can see this high relatively equal low resistance. You can see this fair value gap here. So I think all of this price action will be for the markets to trade above this high into this gap. Then we can see a continuation because the higher time frame market structure is still bearish for euro. And you can see this is bearish for euro, obviously. So we're going to see I think likely to see a very good sell-off from here. So I said I wasn't really interested in going short again as soon as market traded above this high and into this OB. So it's just how this market is going to trade here. Okay, and that's what we've been talking about for weeks now. So on the monthly time frame, like I said, we are seeing the markets trade below previous monthly low and expand gracefully inside the range of the previous monthly candle. And I was talking about this level here, this fair value gap, although markets has poked its wick here a little bit here, but I think the markets are going to trade through here and run buy side liquidity here. But first, it's not really about those long-term analysis and stuff. It's how do you get into opportunities in the next week? Okay, now looking at Euro USD, we see that this was the last impulse price swing, and market made a correction, and market makes correction back into key levels. Of course, you can look at this level here. This is the order block prior to this expansion here. So market returned back into this consecutive down close candle. That's the order block. Okay, and we've seen a green wick, which is bullish, and another bullish close last week, which is also a key indication that we're likely to see a continuation higher. And not just that, you can see how the bodies of these candles here, the bodies here, here, all respecting this, this level here. You can see this level here, they're all respecting this level, and this week just just did the damage and trying to I suppose a discount level. So with weekly time frame, we have DXY bullish. Although what would really make sense for long term, like I said, on DXY is if we can see the next week trade and close above the bodies of this candle, because this is the candle that ran liquidity here below this swing low here. This is a swing low, a higher low to the right and a higher low to the left of it. Okay, market ran liquidity here into this level here. So if we see a weekly candle close above, then we have a change in state in delivery that validates more buy side on Euro USD. So for now, we're still bullish. While we're bullish, markets hit key level. You can see the bodies of the candle respecting this level, respecting this premium array here. Okay, this fair value gap and this this OB here, and you can see the prior weekly candles here, bullish, not just bullish. This candle had a bullish close above this candle's high. So if there is a key level I want to be looking out for, it will be the previous monthly high, the previous weekly high. So I want to see the markets open, return into the previous weekly high and expand. That's it. And why I'm thinking the expansion might be quick is because if we look at dollar index, we had a bearish close on Friday. Okay, we had a bearish close on dollar in DXY on Friday, and we also had a 4-hour change state in delivery. So the 4-hour time frame aligns with the high time frame market structure. So it's likely we see Monday expand lower on dollar index. Okay, very likely we see tomorrow expand lower on DXY because we are below level inversion fair value gap and the daily bearish order block, and we have the 4-hour time frame aligned based on market structure. So we could likely see Monday expand. Okay, and I don't know what Monday's price action is going to be like, but that's what markets are saying. So so we have the previous weekly high. So my expectation, market makes a return into the previous weekly high and expand. Buy side liquidity here, low resistance liquidity run. So let's have this one in the daily time frame. so we can talk more about price action daily chart. So we have the previous weekly high here. All right, we have that there. I want you to note that with your eyes, and you can see this level as well. So we have this as well. So we have this fair value gap here. Market closed above, return back into this auto block. This is high probability auto block because why? There is been an inversion here. Since market inverted this fair value gap, this swing point becomes high resistance. Okay, the swing point becomes high resistance. So if market's returning to a discount and you find something that looks like a model, of course you can always consider it for a trade. Okay, so we have the market closing above this daily fair value gap, above the previous weekly high. So what we want to see is if the markets can just make a return into the previous weekly high, and we are going to see continuation. Okay, and so that's that for euro, and that's that for dollar index. I hope you found this one insightful. Until next time, I think I'm gonna talk again during the week. The mentorship continues, and I already have written down lots of stuff, so I can follow my outline and make my presentation appropriately. So I hope you found this one insightful. Be safe.